CMHC just dropped what could be the wildest chart in Canadian real estate in 2025. The heading on their chart says Toronto has a record number of months of supply for pre-construction condominium apartments. This chart here shows us the months of supply of pre-construction units in the city of Toronto. You can see it spike in 2009, 2012, and even in the little bit of the rate hiking cycle from 17 to 19. It hit all-time lows at the peak of the market in 2021 and then just skyrocketed after that to the point where we're at almost 58 months of pre-construction inventory. If you don't know what months of supply or months of inventory is, it's basically a real estate term that refers to the number of months that it would take to sell all currently active listings at the current sales pace. So we have tons of new condos and very slow sales pace right now. So assuming that no new listings are added to the market, how long would it take to sell all of the pre-construction condos on the market based on current pre-construction demand? Months of inventory is calculated by taking the number of active listings divided by the number of homes sold in the last month. For example, if there are 500 active listings and 100 homes sold per month, the MOI would be 5 months. In the GTA for pre-construction condos right now, that number is over 57 months. This comes from a recent report that CMHC put out on their website called Condominium Apartment Risks in Toronto and Vancouver. I'm really glad to see CMHC doing research on this. I actually presented a lot of really scary data on Toronto's condo market to the housing minister's office about a year ago, and they said that they were waiting to see whether or not CMHC observed comparable risks that I had in the condo market. And it appears that CMHC is on the same page. A couple of highlights from the report. They said between 2022 and 2025, total condo apartment sales dropped by 75% in Toronto and 37% in Vancouver. If you've been following me for a bit, you know I've already covered this. Urbanation in their report puts this out on a quarterly basis, and they observed that the slowest condo market in over 30 years is causing construction to collapse. They show new construction sales at almost all-time lows, touching what we saw in the 1990s crisis when the population of the GTA was 10 to 20% smaller than it is today. So on a sales per capita basis, we're basically seeing the worst condo market we've ever seen. CMHC also observed that a growing number of investors who made recent purchases are under financial distress due to falling prices. And in Toronto, they face as much as a 6% capital loss on pre-construction purchases concluded in 2024. Now, this chart shows the record high number of months of supply for pre-construction condo apartments. The last reading is Q1 of 2025. 2025 is likely going to push this chart even higher. We're seeing more units come online. We have record supply taking place in the 2025 market, according to Altus Group and Zonda. I compiled their estimates of supply closing in this chart here. And we've seen, as per that urbanation chart, sales drop to basically nothing. Do I think that this chart is always going to be that high? Probably not. And CMHC observes this in their report toward the end, where they kind of end on a bit of a bullish note. Not that I agree with them entirely, but they say project cancellations and reduced construction activity are also likely to continue in the near term, but that relief for buyers and renters is temporary with future housing shortages compounded. And you can see that reflected in this chart as well, where basically you have 2 years of really strong completions and then completions basically drop to near zero by 2029. And this is only going to get worse in 2030, 2031, when you've got, as CMHC observed, a huge drop off in the number of new units being contemplated or sold, to the point that 55% of pre-construction units went unsold in the first quarter of 2025, which is marginally below the record high of 56% at the end of 2024. So you've got the last 2 quarters were basically record-breaking issues with their sales. This is causing projects to fail to launch because lenders typically require a presale threshold of 70%. They mentioned that the challenge in funding condominium projects has led some developers to shifting where purpose-built rental unit construction programs offer potential financing. But in the GTA, it's really tough because land costs are high, construction costs are high, and the underwriting criteria, such as affordability and accessibility, is actually worsening. They've changed a couple of the definitions for bathrooms and hallway sizes that is going to blow up a lot of the unit layouts. So even some of the projects that were viable in the city of Toronto are becoming less and less viable. Yet, in spite of this, housing construction is at record highs. We're seeing a huge increase in purpose-built rental construction. So basically all of these high-rise or apartment developers and builders are pivoting from condo into purpose-built rental tenure. I actually think that this is probably a better path for Canada's housing market. It leads to less speculation. It leads to more professional landlords, less buildings with thousands of decentralized absentee landlords, many of whom are foreign capital and have never even seen the unit and aren't experts in the landlord and tenant system and have the ability to evict for own use because they only own one or two units and they can say them or their kids need to move in. Whereas in the purpose-built rental space, the rules are actually a lot more in favor of tenants. Plus, you're moving to a more professional landlord, a higher institutional grade landlord. This is a big piece of the progression in Canada's shift from a high ownership economy into a high rentership economy, as we've observed in many places in the Western world that are further ahead of us in their demographic cycles. Just look at many countries in Europe that have similar politics to Canada, and fast forward Canada 50 years to look like them, 50 or 100 years to look like them. It's not hard to see that we're heading for a sustained decline in homeownership in Canada. CMHC observed that condominium resale prices declined in both Toronto and Vancouver from about $10.50 a square foot down to $8.12 a square foot in Toronto average price, and Vancouver $9.17 down to $8.70 per square foot. So Toronto, 20% drop off the peak here. A lot of this stuff was actually forecasted in a report by Urbanation and CIBC, which I covered around this time last year, July of 2024. It showed that GTA new condo sales were plummeting. Projects couldn't qualify for construction loans. We basically had the lowest number of projects being able to qualify for construction loans ever. That condo construction was dropping. They hadn't really observed prices falling yet, so that seems to be the last shoe to drop, and I think it is probably the start of another down leg in Canadian real estate, or at least GTA real estate. Condo investment had lost its appeal, and they actually had a chart basically documenting the portion of condos that were cash flow negative. 81% of condos would have been cash flow negative. CMHC mentioned the 6% capital loss. I have that estimated at like 100% capital loss. Most of these condos are actually fully equity negative, so if you put a 20% deposit down on the property and you paid $1,400 a square foot, and the resale market now is, even if it's at $1,000 a square foot, you put, $200K or $300K down on the property, all of your equity's been erased. So you've got these sellers in the market, or these new owners taking possession of units, who are facing one of the most difficult decisions in the real estate market, which is, should I lose money fast or should I lose money slow? And that's basically, do I want to take this loss right now, sell this thing and lose my $200K? Or do I want to put it on the market and rent it out and lose $1,000 a month? The average cash flow position for newly completed condos is about negative $600 a month. So do I want to lose $600 a month, or do I want to lose $200,000 right away? It would appear, based on how many people are closing these things and putting them into the rental market in the city of Toronto, where we're basically seeing the highest number of active listings of condos for rent outside of the COVID period, obviously, when there was a bunch of units available because everybody was leaving the city. An almost comparably high number of newly listed condo apartments available for rent. More and more people are choosing to take the lose money slow route rather than lose money fast route. The question becomes, how long can these sellers hold on in negative cash flow positions? The part about this that's really tricky is this is where it gradually has a wear on the economy. A lot of these people funded these purchases from HELOCs or credit. This causes more and more financial stress on households because they're paying out of pocket to service the loan of something that they're not even living in. I think that we're still really early in here. I probably think we're in the third or fourth inning of how things are going to take shape in the condo space. I don't think we're going to see that big supply gap or supply shortage in the market that a lot of people are really banking on to start that recovery in the condo market in 28, 29, 30, simply because we are seeing builders get more creative with financing structures and really push to keep projects moving. These are big businesses, some of the biggest in Canada, and they want to keep moving. They want to keep building houses. Even if they can't build condos, they're going to find ways to do it, and they're doing that right now. And so I think as Toronto becomes more compelling, as land values start to fall, as construction costs start to fall because there are no projects in the market, more and more purpose-built rental projects in Toronto will get started. And purpose-built rental construction in Toronto will look like everywhere else in Canada right now, where basically the notion of a supply shortage has almost completely disappeared. Let me know what you think in the comments. I'm curious, if you had a condo, would you lose money faster? Would you lose money slow? What do you think most of these buyers who are closing on these units are doing right now? How do you think this whole thing shakes out? If you found this video valuable, please consider subscribing to my channel. Leave me a comment, like the video. I'd really appreciate it. That's all for now, and I'll see you next week.